Hello, everybody. It's Friday. Um, all right. So I was recording, did a whole process step by step, and I lost my recording. Completely lost it. So I'm going to just say what I said in the other video that I completely lost. So the main topic of the video was just talking about why I trade ES versus NQ versus YM. And I was saying in that video that I completely lost, which is pretty annoying, that it's primarily to do with clarity rather than anything else. So I totally understand why people tend to focus on relative strength, for example. I don't do that. So what I was showing was that uh, this is ES. This is the 5 minutes. As you know, that's my operational time frame. And I was showing the model that I use, and it's based on three things, not rules. So I do say rules, but I mean framework. So three things: direction, fair value gap, and then fibs. We've got direction, retrace into a fair value gap, and then measured move, 100%. Now that happened while I was asleep, right? So I got the alarm, I was asleep. So at the open, I was saying I use the 9:30 or 8:30 as a reference point. So if we go back, and I was saying that I use the 5 minutes to determine direction. Now, as you can see, there's this 5 minute gray. So I use gray for 5 minutes smart money reversal gaps, right? Fair value gaps. So these are gaps that are specifically to do with a fair value gap that happened when there was a smart money reversal. So there was price divergence or SMT, something like that. And I always highlight that on the chart. I was saying that we have the open. We watch the first 5 minutes. We can see there's no background to this price, so it's kind of flat. And we have these sort of long bars going up, which is our direction. So you know me, I don't really like these long 5 minute bars. I like average looking bars. But I was saying overall, we have our direction from 9:30 and we have this yellow 5 minute large fair value gap. So as you know, based on the model, or you may not know, but it's in other videos, I mentioned that the direction, so it's not a rule, and because it's not a rule, over time I've built understanding, right, based on the framework of okay, direction means this to me. It means based on your anchor, say 9:30, 8:30, or it could be a different time, 1:30, whatever time you're using. If you have consistent up moves in 5 minutes, so I tend to prefer up moves that create first more than 20 points, second has 7 to 10 highs, um, and uh, it has a fair value gap, right? And the other thing is time. It kind of works itself. So the swing low, swing high is roughly about 30, 45 minutes, around that. It can be an hour in some cases. So I use the 9:30 to 10:15-ish, 10:30-ish as a range, as a not range, but as a time frame to understand direction. So that's my kind of internal things to focus on when I'm looking at direction. And they're not rules. You can swap things in and out depending on what security you trade. But that's primarily what I use. Now, not everything has to be there for me to say it's directional, right? Anyway, so I dropped down to the 1 minute, and I was saying if we can get above this smart money reversal, then that will be great. So yellow is always the 5 minutes, and green is 1 minute for value gaps. Gray is 5 minute smart money reversals. So we had the direction, and while I was talking, right? So I was looking at this, we were, 20 points or above. We started to retrace back to the midpoint when you have large fair value gaps, midpoint. Then I was saying I've got to wait for price to get above this, like because it can't just go back in and fall. This wasn't a real push. As soon as we had this close, I went long and I said that's where we're targeting, the 100%. And that was it. It was a very simple trade. Stop loss was below this initially, and then as soon as we moved away from it, I took it to below this, and that's because this was just a one-to-one trade. Okay, a really simple, easy, straightforward trade. And these trades are always the same, give or take, right? And that's when I say give or take, what I mean is to determine direction might slightly change, but it's still direction. The fair value gaps always 5 minutes, but can be a different fair value gap. So I don't ever think or say to myself, because I never ever keep the rules, never keep the rules. It has to be a 3 minute fair value gap, or it has to be a 10-minute fair value gap. My only concern is that there has to be an overlapping fair value gap with a fib. Right? So if I draw a fib that overlaps with the 50%, okay, and 30%, well, 50%. That's just the main thing uh with the with my sort of model, my framework. And that was it. And once we hit TP, I tried to export the video and it just completely crashed. So I'm using a completely different laptop this time because I think that laptop is just having issues. And let's see how this recording goes. So that's pretty much it for today. The primary thrust of today was why I trade ES versus NQ versus YM. It's just clarity. So it's not structure. So it doesn't look pretty. It's not relative strength. And I accept those two things are valid for other people. For me, it's clarity as it relates to my model. So can I see direction? Can I see fair value gap? Can I see an obvious target, right? 100%. So it's a measured move. Outside of that, I was saying that there's a possibility we go a little higher, but overall, so on the higher time frames, I'm actually bearish. So one of the things historically that I do is at the end of every day. And by the way, this has nothing to do with my model because I actually have different models, but this one it's the day-to-day one. But one of the things I do outside of just the fib model is I do an end of day, just on the daily chart, I will do an end of day review. That's it. Just on the daily chart. Just understand where we are in the context of everything. And I used to do this a lot as part of my swing trading process, but I don't swing trade that often anymore, and I mainly stick to day trading, and that's because of prop firms. I use a prop firm, etc. Right? So I have a video that specifically talks about the transition between swing trading and day trading, which was really poor, horrendous. And that led me to this point of using this model, which stripped out the complexity, stripped everything out, and made it so simple that if you are like a pro trader and I was showing you this model, you would just look at me and think, nah. Oh, by the way, none of these models are mine. I didn't create them from scratch. Okay, I just took them from a book or took them from some resource. Yes, I adjusted a little bits to it, but fundamentally, I didn't create anything from scratch, right? I'm just doing exactly what other people have done. And this fib model, yes, it's adapted from the book, but it's this roughly the same thing, right? Um, so the book doesn't have anything on targets, doesn't have anything on overlapping fair value gaps that I have added into, doesn't have anything about time frames. So I use the 5 minutes. Doesn't have anything about anchoring price, which I do, and I anchor them to key moments. 9:30 is one of them, 8:30 is one of them, 1:30 a.m. is one of them. Between the so 3:30 and 4:30 is one of them. Um, End of day is one of them, right? So that's kind of what I mean is I haven't. It's not my original idea. I've just taken it on. All right, so that's it for this video. It's Friday, so hope you have a good weekend. I'll catch you over the actual weekend with a weekly review.